Okay, very good morning, everyone. I hope you still, have your energy to absorb, yeah? So this is our final session with our Mr. Siew Yuen Tak, is it? Can
YT.
call YT, call him YT, okay? So, yeah, give round of applause to YT.
Thank you, and thank you very much thank you very much to Magic for having me. I always like to get an idea of who's here. So if you could get a quick show of hands, anybody from other startups in here? Well, so few. Anybody from banking or insurance? Well, there are, so I can't be too mean about banks and insurance companies. Thank you all for staying so late on a Friday. My guess is you're just trying to wait till rush hour is finished before leaving, but still, thank you. Thank you for staying. Magic asked me to talk a little bit about how I see financial services evolving, right? Or the title which we decided upon was the future of finance. Before I get into it, I'll give you a quick introduction about myself and my startup. I'm the CEO and co-founder of Genexu. We are the #1 full-stack fintech here in Malaysia. But practically, what does that mean? The business we operate is ringgitplus.com, which is the largest online financial comparison site. I've been doing this for the last roughly 5 years or so. We started the business with just two of us, myself and my co-founder, in a meeting room. We've grown to about 120 employees here in Jakarta. By the end of this year, we would have helped over 60,000 people get credit cards. We would have dispersed over 200 million ringgit of unsecured personal loans, and much, much more on top of that. Personally, my background, I started my career in finance, investment banking, then I moved on to a hedge fund where I also covered banks. Came back to Malaysia in 2010. I joined a family business, an SME, mostly in traditional media. And 5 years ago, in 2012, I left that to start what became Genexu, but the business then was just ringgitplus.com. Few thoughts to start with. To me, you don't really need to look anywhere. You don't need to think too hard about what's going to happen to personal financial services here in Malaysia, right? You don't need to try and predict the future. Nowadays, you can just look at China, right? When I first started 5 years ago, I think Silicon Valley, right? The US was still the center of innovation. Right? You had companies in my space. You had companies like Credit Karma. But fast forward to today, it's really China that's leading the world in innovation, especially for emerging markets. This chart I took from the FT shows the size of mobile payments in the US versus China, right? And in China, the value of mobile payments is 50 times higher than they are in the US. And these mobile payment companies from China are moving in here, right? I mean, next year you're going to have e-wallets launched by the Ant Touch and Go joint venture. You're going to have e-wallets, I believe, launched by on WeChat as well. The bike sharing app companies which you're now seeing all over KL. I think there's 2 big ones now. These ideas all came out of China, right? They didn't come from the US, they did not come from Europe, they came from China. And in fact, at the very core of bike sharing, the business is not really about providing transport to people, right? The business is about building up what they call a regular use case for an e-wallet, right? Because the people who use, the bike sharing apps, typically they use them regularly. They become a regular user of the wallet, and the bike sharing company gets to know a lot of information about the riders. Another quick thought before I jump into it, fintech, or when you talk about financial services and when you talk about fintech, it's absolutely enormous, right? I mean, I borrowed this from, I just Googled, the fintech landscape. I've been in the business for 5 years, but I'm very specialized in one particular area. That's personal financial services. The whole fintech space is way too big to understand, right? There's some areas which I know almost nothing about. So today I will be sharing almost entirely about personal financial services, right? That's the area which I've spent the last 5 years in, particularly around Ringgit Plus. And so the way I always look at financial services and what I want to focus on today is how important distribution is, right? How important how you get. So in other words, how do you get your personal financial services and why that really shapes the actual services that you get, whether it's the price or the quality. When you think about distribution as a function, right, it tends to be one of the areas that's most disrupted, right? When you think about music, companies like Spotify, which have completely changed the way you get access to music, right? It's changed the way music is distributed. But the way music is made hasn't changed, right? It's still bands, similar to when you think about movies and TV shows. Netflix and now iFlix here are completely changing the way consumers are viewing content on TV, or rather, laptops or iPads. But the way content is made stays the same. One thing which kills me and which I'm trying to solve at Ringgit Plus and Genexu is just how difficult it is to get hold of a personal financial product. Right. This is, I tried to print out a credit card application form as an example, right? This is from here in Malaysia. It's 8 pages of documents which you have to fill out to get a credit card, right? And if you think about, if you went to Lazada and you wanted to buy something and you had to print out a PDF form, right? Even if it was 4 pages long, if you had to print out a PDF form, fill it out, scan it, and send it back to buy something online, you probably would not buy very much stuff online, right? So a lot of services, consumer services, have already solved this problem, but clearly banks and insurance companies have not, right? I'm sure the last time any of you guys applied for a basic banking or insurance product, there's a ton of paperwork to fill out, right? It just really doesn't make sense. So for me, that's been the core problem which I've been trying to solve for the last 5 years, and we're still working on it. Just last week with Ringgit Plus, we announced the first chatbot application for a personal loan in Southeast Asia, right? So if you want to apply for an RHB personal loan on Ringgit Plus, the entire application is done from a chatbot. This is a screenshot from our website. There's no people involved, right? The entire process is run by the AI. We did this to solve a core problem, right? We did this because we realized, for one thing, consumers were applying mostly from their mobile phones, right? Not from desktops, which means that consumers needed an interface which they could use on their mobile phone, and application forms, as you know, are terrible on a mobile. The other problem we wanted to solve was that consumers were trying to apply at all times of day, right? And again, call centers and branches, they close down at 6, 7 o'clock. Whereas the chatbot is available to help you 24 hours a day and on weekends, right? So we did this again. We did this to solve some very basic problems, right, to help customer service. One of the biggest challenges which financial services companies face is what we call KYC, or Know Your Customer. Has anybody here had to open up a bank account recently? No? Yes, no? No? I think I've opened 3 bank accounts since I moved back to Malaysia over the last 3 years. It takes me on average about 2 hours in the branch. I mean, it's such a painful and crazy process, right? The amount of, got to fill up the forms over and over again. And one of the main reasons it's so painful is because of all the regulations around Know Your Customer, right? For any bank or any regulated financial services company that's providing you, say, payment services or account services for your money, they have to meet all these regulatory requirements around Know Your Customer, right? They need to verify who you are. And it's one of the biggest issues. And it's probably one of the problems that's least well solved, right? There's not really no one's really figured out how to get around this. In Malaysia, if you want to open up a bank account, you still have to walk into a branch, put your IC into a reader, check your thumbprint, right? You cannot do it virtually. And what does this mean? You can't really read it from here, but it's I borrowed this slide there's 3 great reports, if you guys like to read, from the World Economic Forum about fintech. This is a slide taken out of their report about identity. And it causes huge problems, right? Because the fact that people need to verify their identity makes processes slower, such as when you're trying to open up a bank account. There's also a lot of excess information going around, right? When you look at what happened with Equifax recently, I think Equifax is one of America's largest credit rating agencies. They got hacked a couple months ago, and almost everybody in America had their information compromised and hacked, right? And again, it's because companies need to hold so much information about you. Another huge problem around financial services is assessing risk, right? Which is, for example, if you want a credit card or a personal loan, how does the bank or moneylender decide whether you're creditworthy? I would say this is probably the area which gets the most attention and where you're seeing some of the coolest things happening around the world, but also particularly in China, and now you're starting to see it in Southeast Asia. In Malaysia, we're still fairly traditional, right? When the banks look at lending you money, they'll pull your CCRIS record, which is your central credit report, and they'll look at your income history, they'll look at your job security, the type of industry that you're in. So they will look at what I would describe as very traditional data sets, right? And there's two things about this. One is, again, these are very traditional data sets which banks have used for decades, but it's also a very slow process, right? The bank needs to go and check and verify this information. Usually can take a couple days before they approve your loan. Some banks can do it in an hour or so. But there are companies all over the world which are using new types of data, right, to decide whether or not you qualify for a loan. And what's really valuable about this is they're able to evaluate people who've never been able to get access to credit before, right? So for example, in Malaysia, you may not have a central credit record, right, because you've never managed to take out a loan before, or you've never had a job which qualifies you for credit. But if you're in a country like China, right, so China, I think only about 25% of adults in China have central credit records. But companies like Alipay, companies like WeChat are able to evaluate your creditworthiness based on alternative data sets, right? So simple things like how often you transact. So they assume that, if you're somebody who shops regularly, it means you have enough money to shop, and it means you're probably able to repay a loan as well. I talked about KYC, right? And it's really hard for banks to verify, are you really who you are virtually if they don't see you face to face? And even if they see you face to face, right, is the information you're giving me correct? But you think about the alternative data which is available today. It's companies like Gojek in Indonesia. Have you guys heard of Gojek? Yeah, it's completely changed the way Indonesians get around, right? Because it's so cheap now for people to get a Gojek, right? To get on a motorcycle, a taxi to work and back. But one of the things Gojek has is they know where you live and they know where you work, right? And Gojek is building their own financial services business within, on top of their ride-hailing services, because they have this data that no one else has, right? They know where you live and they can verify where you live because one of their drivers picks you up almost every day. They also verify that you will regularly go to work because they drop you off there every day. And that data is so valuable, right? That's data which no bank can get on you. Other types of data, there's a really cool company out of the Philippines called Lendo. They look at your social media data. There's companies which look at data from your mobile phone, right? So in a lot of economies, if you want to, especially emerging markets, if you want to get a loan and you don't have a credit record, they'll ask you to download an app, right? And this app will scrape all the data on your mobile phone, and it is crazy. If you actually Google the amount of data which is available to a company, and which you have to give them access to it sometimes, but it's insane the amount of data which you can pull from a customer, right? So if I give you some examples, they can go through all your browsing history from your mobile phone. They can read all your SMSs, right? They can look at your call history. So in China, one of the things they look at is, they'll ask you who your emergency contact is. They'll ask you who your family members are, and they'll check whether you regularly call your family members, right? So the assumption is, if you call your mother, you're probably a good person or a better person. But these things prove to work, right? Another thing they'll look at is, are you a responsible person who charges your mobile phone every night, or do you let it run out of battery and then panic the next morning? Because if you do, you're probably not going to repay a loan. But this slide really captures a couple of themes, right? I think one of the biggest challenges which we face in emerging markets and across Southeast Asia is financial inclusion, right? It's giving or providing financial services to people who traditionally have not been able to receive financial services. And there's a couple reasons for that historically, right? One is that if we had to open branches and hire people to run these branches, it's always been historically quite expensive to provide these financial services. So for lower income people who cannot take out bigger loans, right, who don't have enough money in the bank, it's not always been worth serving them, for one. And secondly, traditional methodologies to assess creditworthiness were not able to assess these people, right? But as I just shared, a lot of the new technologies and a lot of the new services being offered to consumers are collecting an insane amount of data, right? Which again allow banks or even now alternative lenders, right, to provide financial services to people who never had it before. So I've talked about a couple of things which I believe are going to change, right? But interestingly, what I'll share now is one thing which I think is going to stay the same for a very long time, and that is the role of people, particularly in the education of financial services. These charts, a bit hard to see at the back, but let me just share the data. So this is a little bit old. I think it's from about 5 years ago, taken from some of the most developed economies, right? The US, Germany, UK, France, Japan. And BCG, the consulting firm, did a survey to see what percentage of consumers bought insurance purely online, what percentage of consumers bought it purely face-to-face, and what percentage of consumers needed what they described as a hybrid, right? So they did some research online, but they needed to either see someone face-to-face to ask questions or buy, or they needed to speak to somebody. And even in the most developed economies, right, only about 15% roughly of consumers actually bought insurance purely digitally, right? 30% bought it purely face-to-face, and about half, the remainder, of people needed some kind of human interaction in order to decide what type of insurance to buy. And this hasn't really changed, right? And despite, I know we've built a chatbot, but we have customer service representatives there to follow up on questions the chatbot can't answer. And this is one thing which I don't see technology changing anytime soon, which is, financial services products are complex, right? They need to be explained. Consumers need to be educated gradually about them, right? Consumers still trust somebody more when they speak to them, or they trust them even more when they see them face to face. So whenever I read about companies who talk about completely digitizing financial services for the masses, I get very skeptical, right? I think it's going to take a very, very long time. Even in the US and in Europe, when you read about robo-advisors, right? All these companies like Betterment, Wealthfront, Nutmeg. On the surface, they are robo-advisory businesses, right? But there's been quite a lot of data released since that shows a lot of these sales and marketing efforts are actually done by humans, right? So the initial survey can be done digitally, but humans have to be there to follow up. So what happens when you put all of this together, right? Where do I see the future of personal finances, right? And this is also something which we are heading towards with Bring It Plus and our other aggregators, is a concept. It's not my idea. I've taken this from the internet, right? A lot of companies talk about this. It's called the Bank of One, right? Now the idea is that at some point in the future, right, we will have so much data about each and every one of you that the financial services which you take will be completely personalized to you, right? So what that means is instead of having to choose the current accounts which are available, right, or the loans that are available in the market, when you log on, let's just say when you log on to your Maybank to you, right, Maybank will offer you rates, they will offer you services which they will not offer anyone else, because they know so much about you, right? And so what does this mean? Well, the app will probably know where you go. They'll definitely know where you shop, right? They'll know where you like to eat. So you will be given discounts at shops which your friend may not have, right? When it comes to loans, nowadays banks still price pretty broadly, right? There's very little personalization. But at some point, they're going to know exactly when you need a loan, right? And they will more than likely give you an interest rate which is based on your exact personal behavior with the bank, right? So how much money is coming in and out of your account, how regularly does it come out, where do you shop, what else do you do online, right? Again, before long, banks will start buying data or trading data with partners such as e-commerce sites. And this is very much my vision as well for Ringgit Plus, right? Which is right now, when you come to the website and you want a financial product, you see the same site which everyone else does, right? You see comparison of all the financial products in the market. But the more data and the more you use our service and the more data we collect about you, the better we will be able to recommend products specifically for you, right? We'll know which products you've taken in the past, and we'll say, hey, right, here's could be a new car insurance policy in the market, right? Which is similar to the one you've had in the past, but perhaps cheaper or better coverage or both. I've no doubt that in my lifetime we will end up here, right? People will get increasingly personalized financial services. You will no longer have to put up with or just accept the same things which everyone else has. I'll wrap up with a few kind of my personal thoughts, right? Fintech has been very hot for the last probably 2 years, right? It's been in the news a lot. Investors are very excited about it. Banks and insurance companies have been very excited about it. But it's not very new, right? Does anyone here know when Bitcoin was actually launched? 2009. I think the white paper came out a year or two before, right? So Bitcoin's been around for 8 years. Obviously, the price has gone up like crazy the last couple of years, but it took a while, right? Same with peer-to-peer lending, right? I think P2P lenders were approved in Malaysia by SC last year. Some of them have started operations this year, but Zopa, which is one of the first peer-to-peer lenders, it's from the UK, was launched in 2005, right? So the concept has been around for over 12 years, right? It's not a new idea. And this is a topic that always gets asked, right? Which is regulation good or bad for fintech? How are regulators going to deal with it? My own personal point of view is that we need it, right? Even for us, Genexu with Ringgit Plus, we are coming under more and more regulatory scrutiny. We will require more and more licenses to do what we do. And my personal opinion is that's better for us, right? I was based in London during the last global financial crisis, right, which was about 11 years ago. And I had friends at Lehman Brothers who lost their jobs. Right? I remember walking to work the day Northern Rock actually had a bank run. Right? I don't think most people haven't seen a bank run in their lifetime, right? But that morning we walked past the branch on the way to work, and there were people queuing outside to take their money out of the bank, right? And that's not a good feeling to have, right? When you put your money into a savings account, you assume you never worry you're not going to be able to get your money back. But in London, one of the global financial centers, Northern Rock, it was bailed out essentially by the government, but essentially the bank collapsed. And these are examples of regulatory failure, right? Luckily for us in Malaysia, Bank Negara is one of the world's best regulators, right? They're one of the strictest. But as a result, we've got an extremely stable financial services ecosystem, right, for banking, insurance, and investments. And personally, again, I believe it's better for us. Right? It's better for the companies. It's better for consumers. One final thought is that again, the title was the future of finance, but for me, fintech is already happening, right? And consumers are the real winners. On the top is three recent pieces of news, right? One of the coolest things, it's scary for us, but it's also very good for Malaysia, right? The JV between Ant Financial and Touch 'n Go, right? They are going to do a lot in the financial services space. Right? Ant Financial is one of the most successful fintech companies in the world. Right, they're providing their technology and know-how to Touch 'n Go. My guess is almost everyone here has a Touch 'n Go card, right? So the services which are going to be provided to you as Touch 'n Go card holders in the coming years is going to go a lot further than tolls and car parks. When I started 5 years ago, trying to persuade banks to do innovative things was and still is fairly painful, right? They are big and slow companies. But it's changing, right? The banks are now actively looking, insurance companies and banks are actively looking to be more innovative. CIMB, right, the second largest bank in Malaysia, one of the largest banks in Southeast Asia, hired a chief fintech officer, right? They really are committed to adopting technology, right, into their everyday business. And Allianz, right, one of the largest insurers, publicly committed to expanding their partnerships with digital companies. So, one of the things I've seen that change over the last 5 years is I've seen how the biggest players in the market, right, the banks and insurance companies that provide all of us financial services, are starting to take notice, right, and they really are starting to embrace technology. And ultimately, it's all better for consumers, right, because if you think about historically, banks and insurance companies have been able to hold on to you as customers because they were the only ones who could reach you, right? So you would have had a bank account with the bank that was most convenient for you to walk to, right? Or you would have taken insurance from the agent which has the best relationship with you. But the internet the internet and technology is going to change that, right? You will be able to access financial services straight from your mobile phone, right? You won't have to worry about branches. You won't always need an agent to get the best insurance policy. And because of that, right, banks and insurance companies are going to have to work a lot harder, right, to create products that are better for you, right, to create products that are more personalized for you and provide a lot more value to you. So that's it for me. Thank you all for your time. I'm happy to take questions.
Thank you. So I have a question about the just local policy in Malaysia. So I believe that the technology is not a problem. So if we just copy the Alipay's technology, and then the challenge in your mind, I mean, mainly the regulation policy or something else. Since Malaysia now would like to work with Alipay, why we don't just set up a local company, just copy the Alipay's technology, just work with the government in Malaysia, internally.
So the question is, what are the challenges bringing foreign technology?
So in your mind, what's the challenges? Because in my mind, the technology is not the problem.
Yeah, absolutely right. So for our core business was very similar to, say, Money Supermarket in the UK. From the outside in, we look very similar, right? But when we launched our business 4 or 5 years ago, we learned very quickly that the business model and the processes were completely different, right? And as time has gone on, I think you've hit most of the important points. Regulation is different, right? Every country's regulation is different. Infrastructure is different. So when it comes to lending, banking, payments, you have different amounts of data available, right, for risk assessment. Right? We've got CCRIS here, which is very good for central credit. There's no central credit anywhere else in Southeast Asia that's as good. In Malaysia, we have ICs. They're really good. In Indonesia, if anyone here is familiar with Indonesia, they've got laminated card identities, right? So the people I know there have like 5 or 6 identity cards, all have different names. Just in case you leave one at a security, you don't have to go back and get it. That really happens. I remember, I would leave a meeting with one of our guys there. He's like, oh, I forgot my identity. It doesn't matter, I'll just get another one. Here you would never leave your IC somewhere, but in Indonesia, they don't care, right? And that's one of the biggest challenges for financial services companies, because if they can't confirm you are who you are, and that little piece of plastic cannot confirm you are who you are, then how do you do it, right? And that is different in every country in Southeast Asia. It's very challenging.
Hi, my name is Eng. I would like to ask, do you have any opinion on the near future or a longer term future of the term deposit, very specifically, term deposit. Yeah, so in this case, it's fixed deposit, because I do not have the insight, I do not have the data, I do not know whether there's a shift in people risk, rewards, appetites. People might have moved their money somewhere else. Yeah.
I'm pretty sure Bank Negara just put out new guidelines for next year, requiring banks to increase their mix of funding from deposits. So, and from what we know as well, because we distribute financial products, there's going to be more competition for deposits. So you should see savings rates increase next year, or benefits associated with deposits improve.
That is from the top down.
Yeah.
What I mean is whether there's a shift from the consumer side,
Oh,
from
good.
data that you have collected.
We don't. That's a bit tougher to see. That's a good question. No, I don't know what I don't know what consumers are looking for. I do know that in Malaysia, we have very poor savings rates relative to the region, right? But that's partly because we've got very stable interest rates, very stable banks. I also know that investments is one of the most, if not the most, highly searched for financial services products online. Right? It's not personal loans, it's not savings. Malaysians are searching for investments.
Thank you.
Thank you.
Hi, I'm actually can answer you that on the investments or savings, but because basically I'm part of a unit trust and investment consultants. So basically one of our fear or concerns recently is unregulated transactions like through bitcoins and all, which is it could be a disruption to our industry of a savings or investment opportunity. But so far, right now we see that we wanted to see is whether, in general, how will the digital economy, digital currency, affect us in a government point of view, from a top-down point of view, for generally everyone.
So the question is, how will technology affect investments in particular?
From the point of determining that whether the transaction is true from the right person or not.
Yeah, I mean, I think all of you guys know, right? Bank Negara recently announced they will make a decision on Bitcoin, cryptocurrencies, right, by next year. ICOs are very hot right now. People are even telling me I should consider raising money from an ICO. I don't think that's going to last too long, right? Because as you pointed out, there's a good reason why investments are highly regulated, right? Because it's to prevent, particularly to prevent the fraud and to protect investors. But I guess another point of view, I didn't talk about investments today, but Malaysia, I think, will slowly follow the global trend, right? Which is that investment products for the mass will become simpler. And I think in Malaysia, you pay quite a lot of money, or a lot of money is spent on distributing mutual funds. And that's because it takes a lot of effort to persuade people to buy mutual funds, right? So the salespeople need to be compensated. Generally, what you've seen in more developed markets is that investment products become simpler, right? So you move from mutual funds to market tracking funds like ETFs. And ETFs they're passively managed, so you don't have a team of people there making the investments. They're also simpler to understand, so the commissions drop. Also, as society becomes more educated about investments, you have less need to hard sell investment trusts, so commissions drop as consumers go online and compare and buy. I don't know when it will come, right? But I believe you will see quite a significant disruption.
Hi, just want to ask, with more and more banks, especially local banks, moving into looking at this digital banking so-called strategy, and you see more and more banks getting involved with startups, especially in the fintech. Do you see, you start to see, for example, OCBC having their own little department within them with acts and think like a startups. So do you see that the banks, there's no use of having startup because the banks themselves will either eat you up, right, one day, or they just recreate themselves?
Yeah, OCBC is not the only one. CIMB has a whole fintech department.
Yeah.
I think there's so much to do, right? That there's never going to be a shortage of problems for startups to solve. Even as banks start up their own divisions, there's still, in fact, what a lot of these divisions do is actively go and look for startups to work with. There are a handful of banks, right? I think CIMB, some of the largest Singaporean banks. The largest banks tend to like to keep things very internal, right? So, for example, BCA in Indonesia, right? Strict policy. You know, they do it themselves. If they work with someone else, eventually they're going to buy you. Kasakon in Thailand, I visited their campus. It's insane. They've built, there's 2 huge buildings, K-Bank, DBS is a major investor. One building can house 5,000 technology people, and they've only got about 2,000. So essentially what K-Bank want to do is they do not want to rely on third-party technology providers. They want to build everything themselves. Then in one part of the other building, they've got the most incredible like startup area. I've never seen anything so fancy.
So hence, on one hand, they are advocating open banking, but on the other hand, it's actually closed banking still.
Yeah, I mean,
within them.
I think you always have a mixture. You know, not every bank is going to be able to solve all of their own problems. And just like in every other industry, when you get companies that specialize in certain areas, so like for us, we specialize in customer onboarding. We will still build better solutions than them. But even though we're better, sometimes banks will still want to use their own, and that's fine. All right, so there'll definitely be a mixture. But thank you.
Just now I mentioned about P2P and also I think crowdfunding. Licenses have been issued in Malaysia, but I think over the past few years we don't really see much activities and interest in this segment. Why do you think is the reason, and how do you see it moving forward?
Equity crowdfunding has been around for a couple of years. I don't know. I can't remember when it was released. Whoa, good catch. I think equity crowdfunding is tough. You know, ECF. Equity, you know, making equity investments in companies, even in big companies like on the stock market, is difficult, right? Companies, their performance goes up and down. For small companies, it can be even tougher, higher risk. I think it's positive that some of these guys are able to raise money, right? Even guys in my office have actively participated in some of them, but it's hard, I think, for startups to reach that stage. And I think even around the world, equity crowdfunding has never really taken off. And even crowdfunding sites like Kickstarter, you know, I love going on to Kickstarter to read about, you know, and to look at the new products. But the reality is so many of them fail, right? Like I'm personally fed up of using it because so many of them are, you know, a year later still can't deliver the product. It's kind of give and take. For P2P, that can work, but there's a lot of risks, right? In Malaysia, the licenses were issued last year, but they only started lending this year. So we'll see what happens. I think it's very positive for SMEs, right? So they're targeting small to medium-sized companies which banks no longer want to service. So I think that's very, very positive. If it's done right, it does also offer better returns than fixed deposits, right, to consumers. But it can take a while to work through. It's going to be interesting here because in Southeast Asia, there's kind of a rush to do it, right? So the peer-to-peer companies are going straight to sell the loans onto consumers. You know, in developed markets, right? So like Lending Club in the US and I think it was Lending Circle in the UK. The early peer-to-peer guys were not peer-to-peer to start with, right? They used their own money for a couple of years to test their credit scoring algorithms before they went to market. Whilst here, they're going straight to market, so we don't know how these loans are going to perform. You know, I know some of the investors in Singapore who've been testing that market for a while. They said, look, actually, if you average out the returns, right, and the defaults, you're looking at returns that are only just slightly better than fixed deposits. That was the experience of the last couple of years, right? But it's still a bit early to say, right? It's really hard to scale a peer-to-peer lender, really, really hard, because like as a startup, you always want to grow, but when you're a lender, you don't want to grow your loan book too fast. It's more you'll grow a bit, then you want to wait to see how the loan book matures, test your algorithms before you grow again. It's not like the kind of e-commerce startups that can do this for years. But it should grow, and SC, Securities Commission, their licensing was very narrow, right? They only released peer-to-peer lending licenses for SMEs. In Indonesia, you can do it for consumers, you can do it for share margin financing, you can do it for properties. So I think eventually when they're comfortable with the model and they open it up, you'll see a lot more interesting things happening.
Thanks for sharing, Hoiti. I'm Kenneth. Just like to know, there's this one particular very interesting slide on digitalizing application form. What's your view or what's your take moving forward from now, 5 years down the road? What will be the agreements or even application forms in the banks? Like, will it be all digitalized?
It should be. I mean, why do you need paper, right?
Are we really ready for that, even for agreements?
We should be. You know, the problem, the reason why we still have paper is because you work in a bank or insurance company.
Financial institution.
FI. You know that there are tons of legacy processes that require paper, right? There's no reason why you need something printed out, but the processes need it printed out. A lot of the international banks have started to remove paper from their processes. It just takes time, right? If you're in a big bank like Maybank or CIMB, changing something like an application form can take a very long time. And it's not just the application form. They need to change the systems, right? I mean, it's like for the RHB personal loan, the application is online through a chatbot. But even if you're approved and you go to a branch to collect your money, the person at the branch still has to re-enter your information into another system, right? Because those two systems are not integrated. So there's a huge amount of technology challenges in the banks. So even as your point, they are building fintech capabilities in-house, but banks and insurance companies are not really set up to move fast, right? But to answer your question, yeah, there's no reason why we should have any paper whatsoever, right? Because things are actually more secure digitally. It can be more readily backed up, right? It's like the difference between a notebook and Evernote or OneNote. When so you have something on Evernote, you can secure it on the cloud. It can be accessed through multiple devices. A piece of paper, it can be damaged. It can be lost. Thanks. Thank you. Any more questions? Oh, in the front or middle. Thank you.
Okay, one more.
Please.
That's based on your experience. Is it very easy or not easy in Malaysia to set up start a company to provide the financial services? For example, you have to apply for the license or approval or blah blah blah. Will take because I know Alipay is the Prime Minister invite Jack Ma to just get in, so everything is very quickly and very easy.
It's not easy anywhere in the world to participate in financial services. I say in general, Malaysia is easier than a lot of other countries in Southeast Asia as a foreign company to set up, right? If you try and set up a foreign-owned company in Indonesia, right, it's everyone and anyone's nightmare. Same thing as Thailand, same thing in Vietnam. So we are fairly friendly to foreign companies. When it comes to financial services, good question. I don't know because I can't compare. I'd say, recently it looks like OJK, the Indonesian regulator, has made it a bit easier to do more. So, for example, with their peer-to-peer, it's a bit broader. But at the same time, like I said, it's harder for foreign companies to set up in Indonesia. So it's kind of give and take. Yeah, it's never easy to participate in financial services. Thank you.
Any more questions? No? Okay, guys, I think that's it for today. And thank you so much for your participation. Thank you. for our session today. And well, this is the final session. And the survey form, just drop in at the reception there. Thank you very much.
Thank you all. Thanks for your time.